Hi, everyone. Greetings and welcome to our quarterly EU solar market developments webinar, this time on Q2. My name is Michael Schmela. I'm the Executive Advisor and Director of Market Intelligence, and I'm your moderator today. I hope you already have enjoyed some relaxing holidays, or you will soon, or like me, are actually on holidays, so with a small interruption today. At least from my side, I felt it was very much needed this holidays, and probably for many of you as well. We have a sort of a roller coaster time these days in the solar industry. For those who have been in this industry for several years, that's nothing new. Nevertheless, it's always a challenging time. And June was in particularly busy with the SNEC. I think some of you might have been there as well in China, and Intersolar taking basically place back to back, the one ending on Saturday and the other one starting on the next Tuesday. So I think there's a lot of data points and a lot of news and a lot of rumors, and all about this we want to talk about today. We do have we do have 90 minutes today, where we just want to look at the EU market from different angles. Gary, now it works. Angles, and just a few remarks. So this is a webinar, so a members-only webinar. So this is exclusive content, so please don't share this information. You will get the presentations later via email, and you can also access it on our members part of our website. So we will have today, within this 90 minutes, different presenters. So I will give a quick intro, what I'm doing now. Then we will have my colleague Jonathan Gorremans from the Market Intel team at SolarPower Europe talk about the EU market update. That will be followed by Simon Dupont, who's a policy analyst from the policy team. He will give then the latest news from what the policy team have gathered in the last few months. Then we will have our first guest. We're happy to have with us Marius Bakke, who's a senior solar analyst at market research firm from Norway, Rystad Energy. He will present their latest analysis. And like we've done that in the past, we've also invited two associations, always members. And this time we have with us SER, the French renewable solar, the French renewables associations. And we will have Salomé Durand with us, who's responsible for solar. And we also have the Greek market being represented by the policy advisor of HELAPCO, Stelios Psomas. So let me just quickly start. Here I just have one slide showing our global market outlook, which we launched during Intersolar. If you haven't downloaded it yet, please do so. You should have also received the data of this market survey, which we make exclusively available to our members in an Excel format. So if you haven't received that, or please look also into the members area. If the password is somehow missing or a colleague has that, please get in touch with us and we will help you. Just from this global market outlook, 2-3 slides. Here on Europe as a whole, not the EU, we've seen a considerable growth, larger than before, over 50% year on year. to over 70 gigawatt. That's amazing. It shows also clearly that not only the EU market is growing, but also other markets beyond that. And we include Turkey here also as part of Europe. Here you can simply see that the share of the non-EU markets has increased from around 80%, from only around 5% 13, 14 years ago to almost 10% last year. We see stronger growth now in the EU over the next few years. Nevertheless, the market is also growing outside the EU 27. Just briefly on the top 10 markets, I think it was very interesting. We were pretty much spot on with our forecast for Germany. We had basically forecasted 15 gigawatts, a doubling of the market from last year. That was actually happening. Spain, we underestimated a little bit, not as much as the year before. So in the end, Spain, the Spanish market was bigger than the year before. Most thought actually Spain would not do that. But in the end, the large-scale market turned out to be bigger than anticipated. You could also see that many other markets have been growing quite strongly, and a number of them actually more than doubling, including Sweden, Austria, or Italy, for example. Just one more slide from our GMO. And here you can simply see what has changed when we compare our global market outlook, which was published, as I said, in June with data from April, May, compared to our European market outlook, which we published end of last year. You can simply see here that we've become, in general, more conservative on what's happening in the EU, not for this year, and but for the coming years, and the reasons are obvious. So that although a lot has happened in Brussels and a lot of solar or positive solar legislation has been implemented, much of that has still to trickle down to the member states levels. And of course, we're seeing more and more challenges because of flexibility. Simply curtailment rates are increasing, and the value of solar is going down, which makes it more challenging to finance and build solar systems. But just this as a summary from our recent global market outlook on Europe. I would like to give now the word to Jonathan, who will get more granular on what we've observed in the last 3 months. Jonathan, the floor is yours.
Thanks, Michael. Let's see if I can get the control. There we go. Okay, so thanks for the introduction, Michael. Indeed, so we grew a little bit less optimistic compared to our European market outlook when we made our global market outlook. And so now the first data was released by 10 out of the EU 27 markets, a significant amount of capacity installations represented by these 10 markets. And that begs the question, did we underestimate it again? Because that's, of course, a notorious thing for a solar market analyst to do. If we would purely extrapolate for the current data that's available, which is limited and in many cases an underestimation, we would get to 66 gigawatts. if corrected a little bit. So that would mean a market between our medium and our high scenario. Estimations from the global market outlook, and a growth of around 8%. Now, is this going to happen? We'll go into more detail. Just a quick note on the table on the left side. So these markets are the ones that released official numbers already. Note that in many cases, as I mentioned, it's a little bit of an underestimation, still to be corrected. Sometimes it's only ground-mounted data in the case of Spain, for example, and sometimes it only considers one region or a couple of months. So it's hard to draw conclusions out of this, but we try to draw some conclusions out of it nonetheless. And so pure extrapolation, we might get to a market that's 2 gigawatts higher than what we expected a couple months ago. I'll now focus on the top 3 markets from the EU27, which also cover around 50% of our estimated installed capacity for 2024. So a bit of country-specific highlights. The German data is easily updated online, and so it needs to be taken into account that the recent numbers are most likely an underestimation. Usually this is around 25%, but nonetheless, you see these red bars representing 2024 being at least equally high in Q2, but significantly higher in Q1. And this hides a little bit the seasonality effect, but it's still in there. So residential market development has really slowed down as expected, but utility and large C&I rooftops have driven the market a lot, especially in Q1 in comparison. So these two quarters already indicate that we might or will likely reach this 16 gigawatt annual market, which we predicted a couple months ago. When we go into Spain, it's important to consider the ground-mounted installations because they represent for 2024 around 70%, a bit more than 70% of our estimated installed capacity. And so looking at the final quarter, that's usually an underestimation, still to be updated a lot, but the first quarter already indicates that it's significantly lower than last year. And simply at this rate, we will not reach this 5.4 gigawatts of utility scale solar. Now be aware that last year as well, these sudden peaks of ground-mounted installation will happen again this year. It's a question of when, not if. And so there is also some hopeful signs of a lot of permits being granted for Spanish installations, for example. Italy then, some new data there, considering the first half of 2024. You clearly see this trend of downwards installed capacity for residential installations in the definition of the TSO, which is up to 12 kilowatts. And you clearly see a stabilization on the C&I segment. But what is interesting to see is that Q2 of the utility scale segment was almost equally strong as Q1. For those of you that were in the presentation of last time, that was the question for the Spanish market. Will Q2 perform equally strong as Q1? Since this peak in December, January was really high, relatively speaking. But Q2 seems to go pretty strong as well. And so at this pace, it will be a stronger than expected Italian market, which is more than the 5.9 gigawatts we predict. So that's concerning the top 3 markets. And then there's 7 other markets which release data as well. I'll go into a little bit of detail on each and every one of them, but not too much since time is limited, of course. You can see in the table, it's mixed between clouds and suns. So that's also why this estimate really needs to be taken lightly of 66 gigawatts, because a lot can happen still. So in the Netherlands, it's a cloud. Why? Because the backlash of the net metering decision by the new coalition, together with some decisions that might lower electrification in the country, the backlash from this is bigger than expected for the residential market. And that's the biggest market in the Netherlands. So we see really a stronger than expected decrease of residential installations. And this is not only because of the decisions from the new coalition, but also because of these feed-in fines that are being charged to PV households with PV, and with the increasing net congestion, of course, in the Netherlands as well. So we see a little bit of below expectation developments. There is some hopeful signs from the utility scale segment, some contradictory data given by people who keep an eye on those segments. So it remains to be seen whether we will reach this 4.4 gigawatts annually. Then the Polish markets, there is a further slowdown of the residential market, but the utility scale market shows promise, especially in April. So in April, all of a sudden, there were some big connections being made. So we see 1.2 gigawatts in the first 4 months, which is below expectations if you would extrapolate. But as said, the last month of the available data was really showing some good numbers. France is in line with our expectations. So the strongest growth, relatively speaking, was experienced in the CNI segment. Salomé will probably go into detail here, but we see around 1 gigawatt per quarter, which is in line with the 4 gigawatts we predict for 2024. The Austrian market then, contrary to what we heard in the beginning, it's not slowing down as much, this residential segment. There was some doubt that the switch to a tax rebate scheme was more complicated than it should have been, and that a lot of households were confused about this, and this caused some delay. But that doesn't seem to be supported by the data. So we see around 700 megawatts in Q1, which is above our expectations for the 2.1 gigawatt annual markets. Then next, we have a residential market that does perform badly, which is the Flemish market in Belgium. So it has dropped a lot. And the subsidy being cancelled is part of the story here, but there is something else going on with the public sentiment as well. The question now is whether CNI installations will make up for this during the year, because we really expect these installations to grow, given the mandates that companies have to install some form of rooftop PV by June 2025. So at 200 megawatts for Q1 in Flanders, that's really below our expectations. Portugal then, strongly above our expectations in all segments, actually. So there's no real clear segment driving the market more than last year. We saw around 0.8 gigawatts in the first 5 months with an expectation of 1.7 gigawatts. That's very good. The question now is, will we reach this 2 gigawatt mark by the end of the year? That would be very, very nice to see. And then finally, the Czech market, where the residential installations have reacted particularly sensitive to the lowering energy prices. And so with only around 500 megawatts in the first half being installed, that's below our expectations of 1.2 gigawatts annually. So this is really this residential slowdown showing. Now, some news from the top 6 markets to clarify a little bit the events of the past months. So starting with Germany, we have in blue, by the way, we have the manufacturing news. In green, we have the drivers of the market, and in red, we have the challenges for the market. So in May, in Germany, we had the closure of the SolarWatt battery storage production facility. This came after the module production facility also closed. We also have EU inverter companies in trouble. For example, Fronius, with around 1,000 jobs being cut over the past 2 months, and SMA dropping their sales forecasts. Okay, Fronius is from Austria, but they have a significant share in Germany as well. And in July, there was some hopeful news for the German market, with the 2 tenders being very successful. Spain, then, we have some rules being set for agri-PV and floating PV, which is good news because now we have clarity. And in July, there was the news about around 7.2 gigawatts in permits being granted, which is good news as well. Italy, then, we have this ban on the use of agricultural lands. We went into this in the last webinar, so please check this one out if you want more details on it. But that's really a challenge for land availability in Italy. In June, then, the Commission approved a 4.6 gigawatts contract for difference support scheme. And in July, there was some good news as well about the amount of regional permits being granted. In Sicily, this was 1 gigawatt over the first half of 2024. So roughly a third of all permits being granted. Then the three other markets in the top 6, we have Poland, which there was some discussion about this capacity market auction draft, because the question was, does this hamper with future battery storage development in the country? That's still to be reviewed. And then in July, there was a tender for battery storage being launched, which is a good signal. Netherlands, then, as mentioned before, this decision on net metering scheme, that it ends in the 1st of January 2027 was not perceived well by households. Then you have the EV subsidy, which is also being dropped in the future, and the mandate to install a heat pump in the future. That's not good news for electrification and PV deployment in the Netherlands. What was some better news to hear about was in this month, some report came out by some organization that tracks the development of SDE++ installations, and around 900 megawatts was installed through this subsidy, apparently. That's the contradicting data we're talking about. Is this true? That still remains to be proven, because the data does not support this so far. So yeah, we'll keep an eye on that. In France, then, finally, there was some manufacturing news. So we had the plant from the Recom group, the Cilia plant, who decided to move to Italy, to consolidate in Italy. We had Carbon revealing plans for a 0.5 gigawatt TOPCon pilot factory in France. And both Carbon and Holosolis factories are now considered of national interest, which is good news for their administrative progresses. They'll probably get streamlined a lot. But one of the challenges, of course, of making a manufacturing industry in Europe is the current price levels. So we'll go a little bit into that. When it comes to the exported volumes to Europe, there is this slowly rising trend in the red bars. This is very different from the volatile exports we saw in 2023. And so Q1 was around 20% lower than last year. We skipped the peak of January and March. In May, the exports are 9% lower than last year, but there's still this steady growth of around 5% over the past 3 months. What does this mean for the wholesalers? Well, we see wholesaler prices have bottomed out. So this graph on the left side shows the average wholesale prices for 3 categories of modules in euros per watt peak on the wholesale market. So that's tax-free module prices. And they are very low, especially considering that they were around more than 50 or more than twice as high 1 year ago, which puts a lot of pressure on the net working capital of these wholesalers. So we saw bankruptcies, for example, with Synthetic Solar in Austria, and that puts additional pressure on the existing wholesalers, which then see these stocks arriving on the market at a discount. So very careful to not trigger some domino effect there. We'll have to keep an eye on that. At the moment, these prices seem pretty stable, even for the low-cost category, which includes insolvency stock as well. On the second figure then, that's a bit more the positive side of lower module prices, is that these might have trickled down to household installation prices. So a report by Salomé Energy did some polling on the price levels in German regions, and they saw around 1.7 euros per watt peak. That is significantly lower than 1 year ago. But what was also interesting in the report was that the range is also pretty big. So for a 10 kilowatt system, they saw prices like 1.3 euros per watt peak, which is really below the stories we heard of 3 euro per watt peak for residential installations in 2023. This story also resonates with markets such as the Netherlands and Flanders, where these residential markets have shrinked a little bit, and there's more competition, less of an order backlog amongst installers. Now, the question is, are we targeting a new customer segment with these prices, the more price-sensitive customers, perhaps? That's for trade and prices. So some interesting developments there. But one other major driver of the solar markets are auctions and PPAs. So our team did a little bit of research into this. And over the first half of 2024, there were 3 EU member states that held auctions. Most of it was ground-mounted capacity, around 80%. And in total, all these auctions cost 5.2 gigawatts of allocated capacity. Only Italy did technology-neutral auctions, and those represented around 10%. So the half a gigawatt you see in the left chart as well. For the German auctions, then a little bit of a zoom in. We see that undersubscription is really a thing of the past. So at least in the first half of 2024, you can see the ground-mounted auctions are significantly oversubscribed, which is the blue bar. And so all capacity was allocated for ground-mounted auctions, as well as for rooftop auctions. When it comes to this innovative tenders, which is solar plus storage, that wasn't really a success in 2023 in the first half, with 0 being allocated. But now everything is allocated. So that's also a success story for future PV developments in Germany. Final slide to end with is an interesting one on PPAs, which are really taking off in the EU. So in the first half of 2024, we saw 4.6 gigawatts of contracted capacity. Last year, it was 5.6 over the entire year. So at this rate, we'll go to a market size that's 60% higher than last year. The average deal size, however, has dropped. So as you can see, the black bar in the right graphs, it's higher for both, but it's significantly higher for the amount of deals being signed. So we're at 73 deals being signed. This is around 75% more contracts being signed, while there's only around a 30% increase in the volume. So the average deal size has dropped by over 20%. So these drivers, lower module prices, are targeting the residential markets, and we have really, again, strong auctions and PPA development to cover the larger scale markets. I'll now pass the word to my colleague, Simon Dupont, to go into policies.
Thank you very much, Jonathan, and good afternoon, everyone. My name is Simon Dupont. I'm an EU policy analyst at SolarPower Europe, and I'm really happy today to drive you to our policy updates since the last time we have seen each other. So, to begin with, so I know it might feel like ages ago to some of you, but we had the EU elections in June, resulting in a new EU Parliament. So you can see on the left of your screen the composition of this new EU Parliament. So our key takeaways from these elections is that we don't have big changes for the two main parties, the European People's Party and the Alliance of Socialists and Democrats, which will keep approximately the same number of seats. However, we had more recently a restructuration of the far right, with now the Patriots for Europe as the third fourth of Europe, of political, the third political force in Europe, and ECR, the European Conservatives and Reformist Group, as fourth biggest force at the EU Parliament. So this is also due to some lost seats from Renew and the Greens. So most of the time, a new EU Parliament means new faces in EU governance and EU institutions, but not always. So this time, Europe and member states made the choice of continuity. So we have Ursula von der Leyen from European People's Party that will remain as president of the European Commission. Same from Roberta Metsola, re-elected as president of the European Parliament, and Antonio Costa as president of the Council. Most recently, we had a new governance established in Parliament committees with chairs and vice chairs of each Parliament committees, which have been elected. So we'll have a snapshot on the next slide. And the next step until September will be the nomination of top European commissioners, for example, the vice president of the Green Deal. So speaking of the Green Deal, so what will happen to our Green Deal with this new political landscape? Well, we still have a broad support of the Green Deal for the next term. Ursula von der Leyen, during her speech at the European Parliament, mentioned a Green Deal for all that will be built on implementation and simplification. We still see a risk for reduced ambition compared to the previous mandates. And for example, specific files could be rediscussed. And as global narrative, we are slowly moving from a Green Deal to a clean industrial deal. As I was mentioning, so chairs and vice chairs for Parliament committees have been elected. This is very new. This comes from last week. So we just selected 5 of these committees to give you a snapshot. Those committees are very relevant to the solar industry. So you can see that for the budget committee, we'll have an ECR chair. For the ENVI committee, environment, public health and food safety, we will have SND chair. For the ITRE committee, industry, research and energy, we will have Boris Budka from EPP as chair of this committee. Then IMCO will be chaired by Anna Cavazzini from the Greens. And finally, Agri, the Committee on Agriculture and Rural Development, very important for agri-solar, for example, will be chaired by Veronika Vechonova from Czech Republic and ECR. So apart from these EU elections, we had also a couple of files, a couple of regulations that are now ready to implement because entered into force during the past months, starting with the Net Zero Industry Act, NZIA, which was officially published on 30 June. Some provisions, such as the resilience non-price criteria in public procurement, enters into force immediately, while we will wait for an implementing act to be adopted in spring for other provisions of the regulation. We just published recommendations on this NZIA new rules, and so you can check it out after the webinar. Another file and regulation that entered into law, this time it was on the 16th of July, is the electricity market design. So certain provisions from this new regulation will enter directly into law, such as the provision regarding PPAs, and others will take more time. For example, grid hosting maps have 6 months to be implemented, and CFDs have 3 years as entry into law. We also published a very comprehensive guidance for the implementation of the electricity market design. So you can also check it out if you want to see the details of this new regulation and how it will impact the solar industry in the different member states. Next piece of regulation, CSDDD, the Corporate Sustainability Due Diligence Directive. It entered into law very recently, just a few days ago on the 25th of July. And now member states have 2 years to transpose this legislation. in national law. And finally, even more recent, the nature restoration law, which will enter into force in 18 days because it was just published in the official journal of the EU. And so this nature restoration law is directly applicable in all member states and sets legally binding targets for the restoration of ecosystems and degraded habitats by 2030. And member states will submit some national restoration plans called NRP 2 years after the entry into force of this new regulation. So we have new regulations ready to be implemented, but also other elements on the political agenda since the last webinar. So we had this very nice initiative, EU Solar Academy, led by the EU, but also in partnership with Energy. The idea of this academy is to train 100,000 workers across the value chain of solar, develop learning credentials at EU level, as well as certifications, and finally implement programs via local partners that can be, for example, businesses as well. Cybersecurity, high on the agenda because, of course, you may know about the Cyber Resilience Act that is expected to enter into force on the second half of this year. We also have, for example, the suggestion to implement auction criteria related to cybersecurity from the NZIA. So we presented also some recommendations on establishing a harmonized cybersecurity baseline for solar PV. You can also check it out after the webinar. Other item on the agenda and for the months to come, it's the bidding zone review. So ENSOE and Acer are leading this work, and ENSOE will release and publish an analysis at the end of 2024 on the potential impacts of such a review of the bidding zone. Consultation has also been launched a few weeks ago, and stakeholders are invited to answer to this consultation to assess the impacts of a switch to more bidding zones. This is, of course, part of a broader political agenda on locational investment signals. For example, also from the Net Zero Industry Act, we had the suggestions for member states to integrate system integration auction criteria in their renewable auctions. And lastly, the Antwerp Dialogue. So the Antwerp Dialogue is a series of stakeholder meetings between the EU industry and the energy sector around key questions about the electrification and decarbonization of such electro-intensive industries that we have in Europe. So this is all part of the Antwerp Declaration. And some of these key meetings that SolarPower Europe will attend will take place in September. So, and this is going to be my last slide. Another item that we would like to see a bit higher on the agenda of the EU is flexibility. You may know or not that the EU Joint Research Center, the GRC, stated that we need to double our flexibility capacity by 2030. Yet we only have 9 EU member states today that have defined targets for storage, only 4 that have set specific goals for demand response, and only 2 member states that have DSO investment plans. So what can we do to unlock this flexibility? We give here some ideas. Mapping the EU's flexibility needs by 2025 will be a first step, as well as developing price signal frameworks to use this flexibility potential that we have in the EU. It's also super important that we make it easier to hybridize solar, meaning integrate solar with wind and or storage projects. And finally, we need to accelerate the smart building rollouts and making the energy system flexibility ready. So if you want more details on this flexibility topic, we just launched our Let's Flex campaign. It's available on our website. So yeah, please check it out if you want to learn more how to grow our flexibility in Europe. So yeah, that's it for me. And thank you very much. I will give the floor now to the next speaker.
Marius, you want to take over?
Yes, thank you very much. Let's see if I have the possibility of actually moving the slides. Yes, thank you. Well, thank you so much for all of the presentations so far, and thank you for the introduction earlier on. I'm Marius Bakke, and I'm heading up the solar solution at Rystad Energy and working there as an analyst. So today I will be talking a bit about Europe. More specifically about the demand outlook for Europe and also a bit about the supply chain outlook. And I'm trying to change slides, but I am not allowed to. There we go. Starting off with the demand side and actual deployments that we're looking at. So we're still seeing, I would say, healthy deployments for Europe, but we are seeing a slowdown, much like we are seeing in other kind of mature markets, such as Australia would be a good one. We're also seeing the same thing happening in the US, for instance. So we're seeing a lot of the same challenges when it comes to utility scale solar and also for distributed and rooftop PV. So starting off with utility. So we're expecting utility solar to take a bigger portion of solar PV deployments this year and also in the years to come compared to rooftop PV. So 2023 was really this rooftop boom that we saw. But a lot of that was actually a backlog of installations from 2022 because of the demand that we had for installed solar, be it rooftop PV or be it utility scale PV in 2022. The amount of new solar PV deployments that we saw were not matched by an increase in qualified labor, for instance. Now, on the utility scale side, you're running into grid congestion issues, be it with grid connection points or just the capacity on the grid itself. Following that, you have long permitting times for utility scale solar PV. Now, for bigger projects, the permitting times are longer. And so in Europe, you're seeing this trend where a lot of the projects from developers are getting smaller and smaller. So quite the opposite of what you're seeing, for instance, in the Middle East and also in Latin America and China, with gigawatt scale projects. You're seeing a lot more of these smaller projects. For land areas, that's also an issue for utility scale, but that will also be a potential issue for rooftop PV. So for instance, now in Australia, you've seen rooftop PV slowing down. And the reason being that you don't really have that many suitable roofs. Eventually, you will run out of locations to have rooftop PV installed. Now, we will be seeing still newer installations, but a lot of that will be recovering of existing rooftop PV systems. One thing that will hit both utility scale solar and also rooftop PV is, of course, the financials. So one thing that we're running into for utility scale solar or rooftop PV is, well, prices have been coming down, but also the economic viability of your project itself has also come down, because it doesn't take that much of solar PV installed and then entered into the energy mix before you're seeing low returns on the electricity that you're actually producing. So this cannibalization of capture rates, which I also have a slide on, is a big issue for solar PV, not only in Europe, but also in other regions. Another thing for rooftop PV is the volatility, just based on policy itself. So we've seen this in other regions where, for instance, California, with the change from the net metering 2.0 to the 3.0, where you had the bastion of rooftop PV installations, suddenly demand for rooftop PV in that area just goes to zero. Another good example would be Vietnam in 2020, where you're suddenly installing 9 to 10 gigawatts DC of rooftop PV on the back of new incentives, but then the government takes it away, and then suddenly demand is just gone for rooftop PV. So that is one of the issues with rooftop PV, and makes it really difficult to actually forecast how much is going to be installed from year to year, because suddenly you have it makes economical sense to install, somewhat hampered by the high interest rates that we have been seeing in Europe in 23 and also still in 24. But if you suddenly remove incentives, the entire market just goes bust. And then you have it back again. You see that it makes financial sense, and then it might be booming. But if we're looking at the financials itself, the problem now is that it doesn't take that much of solar PV, a big portion in the energy mix itself, before you're seeing prices drop to zero or negative during the peak hours of actual production. Now, we can sort of fix this or make it better by starting with hybrid projects. So solar and wind, for instance, could smoothen out the generation curve of your power system. Solar plus batteries would be sort of the easiest solution here. And you've been seeing this in California, for instance, where the change with the net metering scheme really remove the demand from rooftop PV, but you've been installing a lot of battery systems. If you were to have a look at, well, existing plans and announced plans for hybrid solar and battery systems, most of these are located in California and Southeast Asia. And what's kind of in common here is that they're really centered around the equator. So if you're looking at, let's say, Denmark or Germany, how often will you actually get to use your batteries? Well, if you're looking to, let's say, have energy arbitrage or leverage the low points in energy prices during the peak hours of solar and then sell it later, you will really only be able to do this during the summer months, let's say from April to August, September maybe, but during January and December, you will not really be producing more solar energy than there's demand in the market. So you won't really be filling up your batteries. But if you're in a location where you can, let's say, well, we have more solar generation than demand during the peak hours for 12, 11 months out of 12, then that makes a bit more sense. So we already mentioned that, well, the early movers could go in, install a lot of batteries for their projects, and they could leverage the differences between the low prices during the peak hours of solar and then the high prices in the evening. But in the same manner that it doesn't take that much solar PV penetration into the energy mix before you're seeing cannibalization of capture rates, it actually doesn't take that much of battery installation before it flattens out completely. And so for the projects where you're looking to have solar and batteries sort of working in tandem, we're also very reliant on the ancillary services of flexibility to actually make a financial argument for installing this. So we're definitely seeing more and more focus on this flexibility in Europe, but also in a lot of different other markets. Now, one good thing will be if you see a lot of these batteries being installed, a lot of the issues with the cannibalization of capture rates goes away, even if you were not the one installing the batteries in the system. So even for standalone PV systems, they could benefit from others also adding batteries to the mix. So we have now been talking a bit about the demand outlook for Europe, and to sort of shed light on what's going on the manufacturing side, you also need to take into account that supply chain is really a global story. So in Europe, we're kind of seeing the market slowing down a bit, still healthy deployment rates, same in Australia, and even in China, you're sort of seeing a lot of curtailments happening. In the US, you have a huge interconnection queue, long permitting times for different ISOs, but you also have markets where deployments are increasing quite rapidly, such as the Middle East. But even if we're installing, let's say, 500 to 600 gigawatts of DC globally a year, the manufacturing capacities active and announced, to be said, this is not really a forecast. This is just all the projects that are active and have been announced. And that we can sort of tie back to a project. But the amount of capacity that has been announced far outshines the amount that we expect to be installed globally, meaning that we're not really expecting the global oversupply situation to ease up anytime soon, even if a lot of these projects are being postponed, pushed back in time, or just flat out abandoned. If you see the, well, from polysilicon all the way to modules on the right-hand side here, the red bar is what capacity is sort of owed to China. But you're seeing a lot of other colors making an appearance there for modules and for cells. And this can really be owed to the onshoring efforts that we're seeing in Europe, India, and also in the US. But all of those onshoring efforts, they're still sort of taking the backward integration route. And so if we split up this active and announced manufacturing capacity, we only take a look at the onshoring regions with Europe on the top left here, US top right, and in India in the bottom left corner. You can see that it's really within modules and cells that we're seeing the announced expansions happening. For India and the US, which I would say are a bit more effective in their onshoring efforts than Europe has been, at least so far, you really see this backwards integration where they're starting off with the module assembly capacities and then moving on to cell manufacturing. Then you have the ingot and wafering steps and then polysilicon, meaning that if you are going to be producing at all of these announced capacities at high utilization rates, you will still need to import the previous component. And more often than not, that is going to come from China, maybe except for in the case of the US. But for the US and India, you also see that the demand line for domestic demand in those regions being far below the end product of modules. So if you start importing and you're operating at full utilization rates, you will actually be very reliant on secondary markets. You need to find an export partner to sell off all of these modules. And in the case of India, they have been selling to the US. Now, the US are, of course, looking to build out manufacturing capacities themselves, and you're seeing less and less imports coming from India or from Southeast Asia into the US. Now, in Europe, you will not really have that issue. In Europe, you have this target, be it 40% along the value chain of deployments need to be manufactured by 2030 or 30 gigawatts by 2030. You might reach that, and all of the announced module assembly capacity will not really far outweigh any demand outlook that we have for the region, meaning that you could potentially install all of it. You're not reliant on a secondary market. But Europe is also the only region still freely trading with China, and being able to compete on a price level with Chinese manufacturers is extremely difficult. I mean, a lot of Chinese manufacturers can't compete with other Chinese manufacturers in the current environment. So what does that really mean for Europe? Well, a lot of the announced module capacities, let's say for 24 and 25, even if they were to start construction, would not necessarily be producing. And in the bottom right corner there, you can see the top destinations for traded solar modules in 2023. Now, Europe will be highly represented here by Netherlands because of the port of Rotterdam. But Europe still remains a net importer, main importer of solar modules, the finished product. Now, the US still imports a lot of modules as well. But if we were to change this chart now with cell imports instead, you would actually see an upward trend in India, in the US, meaning that all of these announced capacities of module assembly capacity coming online is actually operative. Now, in Europe, we have had declining cell imports since 2022, meaning that, well, we don't have enough cell capacity to actually meet all of the announced module assembly capacities, but we're also not importing cells to help out the capacities that have been announced. So they would not be producing either. There's also one other issue here with the disparities between the different segments in Europe. So that would be polysilicon. The natural off-taker for polysilicon is the ingot and wafer manufacturing sites. Now, European polysilicon is more expensive than Chinese polysilicon. And you're probably not going to be selling it to the US because the US will also have enough polysilicon to meet domestic demand from the ingot and wafer segments. India will probably be buying that from China. So the polysilicon that you now have in Europe is mainly going to China to access the US market. But if you lose access to the US market because of changing policies or anything along those lines, then you're sort of losing that channel for offloading your produced polysilicon, and you will actually struggle to find an off-taker in Europe. for all of your capacities. So how can we actually make sure that we build out enough ingot and wafer capacity and that we maybe can keep all of this capacity alive? Well, we have non-price criteria auctions, which seems to be sort of the best tool for this, to create demand for something that is made in Europe. Now, this all goes down to member states. And while we have had not really undersubscribed auctions so far, you could actually risk having undersubscription to auctions unless the member states incentivize developers to actually go for these resilience auctions or non-price criteria auctions. So you do need clear incentives. Still, that is what Europe is lacking on the manufacturing side. And just looking at the prices in Europe currently and in the world in general, because every single region that engages in free trade with China just follows Chinese price trends. And what we have been seeing here since 23 and really the end of 22 has been steady declines within all of the segments of the PV value chain, be it from polysilicon through the wafering segment to cells to modules. It's just been in free fall since 2023, especially for the module side. Now it's flattened out in 2024 because you really approached the basically the cost of manufacturing for most of these Chinese manufacturers. So if you're saying that that's roughly around 10, 11 US solar cents per watt peak for at least the solar majors, could be higher for some of them. Any further declines will just mean bigger losses for them. Now, in Europe, you're probably not seeing 10 US dollar cents per watt peak for a TOPCon module, but you're actually not that far off. 2 weeks ago, I believe it was a 20 megawatt shipment with delivered duty paid, meaning that, well, the seller is taking all of the cost for the shipments and duties and additional fees for roughly 12.8 US dollar cents per watt peak for the entire shipment. And that is way below what any European manufacturer can do at the moment. But it also goes to show that a shipment due to the Red Sea crisis is actually a huge portion of the module cost for developers at the moment, meaning that roughly a quarter of the total module cost is actually due to shipments. But if you're saying that if you're now manufacturing cell and module in Europe and you're doing that on a Chinese wafer, maybe you're paying roughly 22, 23 US dollar cents per watt peak in cost, or let's say you're trying to sell it for that. But that's still twice the amount of something that's coming out of China. And if the goal is to, let's say, build out the entire value chain in Europe, these non-price criteria auctions, they also need to be structured in a manner that says, well, maybe it has to be made with European polysilicon and a European wafer, especially if you want to be building out those segments as well. But the question is, what constitutes made in Europe? Now, in certain other regions, such as the US and India, it's clearly stated what means made in the US and get your domestic content bonus, or with the ALMM in India and what is actually eligible for government projects. So a bit more clarity and maybe a bit more haste with regards to policies in Europe. And hopefully we can see more happening on the manufacturing side as well. I think that's all I had for today, and more than happy to leave it to the next speaker. Thank you very much.
Thanks, Marius. Salomé, it would be great if you could kick in.
Yeah, thank you, Michael. Thank you, Marius. Hello, everyone. My name is Salomé Durand. I'm head of power of SolarPower for French National Energy Renewables. So I don't see my presentation. Oh, yeah. Here we go. Sorry. Yes, so to introduce these presentations, the French solar market is actually showing strong growth with almost quarterly connections approaching the gigawatt level, as Jonathan already mentioned it. So now to go in further details, with nearly 121,000 projects connected in the first half of 2024, France shows a 70% increase compared to the same period in 2023. Clearly, the professional roofing segment is driving the entire national dynamic. On its own, it already represents around 1 gigawatt for Q2 compared to 1.2 gigawatt for the entire 2023. However, we have a weak signal on large project segment, which correspond to public tenders, which is declining and shows a 22% decrease compared to the first half of 2023. Domestic self-consumptions, the figures confirm the steady rise in residential and a bigger interest shown by the French people in PV. Indeed, over the last 6 months, the sector has grown by 40% compared to last year, with already more than 480 megawatt connected, which represents a total of 500,000 installations on residential segment. Then, moreover, the expected agri-PV effect, anticipated as a growth driver to compensate for the scarcity of compatible land and the slow development process, is still slow to materialize. We hope that the publication of the latest decree and others application text will finally allow the first projects to break ground and thus contribute to the development of new capacities of grounded PV. Now for the outlook for 2024, we have 5 points to deal with. The first point is political stability. It is not a secret that stop-and-go policies are damaging to long-term industries. The result of the European elections, followed by the dissolution of the French National Assembly, created a time of doubt for the entire renewable energy sector, but we hopefully have avoided the worst, which would have been a potential reinitiation of decarbonization. And there are two main lessons that the SER has drawn from this political crisis. Firstly, it is essential to address the question of purchasing power, which means potentially greater support for residential PV. Secondly, we need to work on the legitimacy of PV, but more generally of all renewable energies in the public debate. In this way, the SER is going to shift its advocacy toward promoting the economic and social issues involved in transforming our energy consumption. Less fossil fuels means more purchasing power, more sovereignty, and more jobs. This means providing budgetary, fiscal, and regulatory support to make this transition economically viable for businesses and socially desirable for the citizens, of course. Second point is a new energy program. The political situation has delayed the publication of the new multi-annual energy programs, which aims to raise the development objectives of the energy sectors. The SER maintains its position that a new bill is needed to clearly show that France is well on the way to carbon neutrality and energy sovereignty. As a reminder, at the end of 2023, France issues its French and climate strategy, which sets out development targets for the PV sectors, aiming to double or even triple the annual rate of installed capacity, which was about 3 gigawatts by 2023. Third point is maintain a high level of obligation to solarize roofs and the possibility to develop grounded PV. Of course, to ensure the long-term future of PV development, visibility and stability of regulation are also very important. And the fifth point is to maintain a good level of economic support. The political situation has not removed the uncertainties surrounding economic support, especially in the 100 to 500 kilowatt segment. Nevertheless, the good news of the last few days is that the long-awaited new tariff decree for ground-mounted installation will be published very shortly and will come into application in 2025. This should also support the development of agri-PV projects. And last but not least, and that's the purpose of this slide, is industrialization. We have good reason to believe that the next government and administration will support PV industrialization projects in France. The first positive sign was the signing of the Solar Pact on April 5, which aims to introduce an underscore, which is a communication tool, which means the higher the score is, the more production stages will be located within the European Economic Area. A commitment for the PV industry to purchase a minimum number of panels produced in France or within the European Union, with increasing commitments between 2024 and 2027. Also the introduction of a bonus mechanism in future support mechanism to create the conditions for a market in which European production can once again compete with international competition. A second positive sign is the fact that carbon and holosolis have been considered as national interest project, as Jonathan mentioned it earlier. And to conclude, the third positive signal is the ambition expressed by the authorities to apply the non-price criteria set out in the European NZIA regulation. And we are in this way currently working with the industry and the administration to implement ambitious non-price criteria. So that's it for me. Thanks for your attention. And I now give the floor to Stelios for Greek market.
Thank you, Salome. Hello, everybody. Do I have control? I guess so. Yes, I do have control. Okay. Here is our starting point. As you can see, last year, the Greek market was almost 1.6 gigawatt of new installed projects. And as you can see, the long-term history, it's a very well-known curve, similar to the ones faced by Spain or the Czech Republic as well. But during the last 4 or 5 years, we see a rather healthy market, increasing year by year. So the real question is how we really go from this point on. Having installed all these systems, and I just remind you that Greece is a very small country of almost 10 million people. So you cannot expect a huge market in theory. However, these figures we've seen so far are really exceptional in the sense that when you see the PV share in the domestic electricity production, last year Greece was ranked as second worldwide after Chile, which was the first, with regard to domestic electricity production and the share of PV that has in that. The percentage of Greece, which was almost 19%, was more than double the European average and more than 3 times the global average. And as for this year, my estimates is that we may have a share of almost 24% of PV in domestic production, which will hopefully bring Greece to #1 worldwide when it comes to this indicator. Of course, this is a very good news for our industry. However, the real question is how can you sustain such a success, and if this can be sustained in practice. But this is exactly what my presentation is about. Now, according to the last draft of our National Energy and Climate Plan, this foresees 13.5 gigawatts of PV until 2030. To be honest, I mean, this plan will be amended very soon. In theory, we expect in the coming couple of weeks a new draft to appear by the Energy Ministry. However, it will not change the target for PV that much. But this is just theory. And I say this is just theory because our estimates show that the market will be over 18 gigawatt by that time. And we believe so because up to now, almost 20 gigawatts have already secured a grid connection offer. Already. 8 gigawatt are already connected. So we expect 12 more to come online. Even if all these projects are not realized, which is a bit strange because the most difficult thing to get is a grid connection point. And these 20 gigawatts, as I said, already have secured such a grid connection point. So even if they cannot finance their projects, they can easily sell it to an interested investor to go on from that point on. And out of these 12 extra gigawatts that we expect by 2030, some 10 gigawatts are systems that are meant to be connected to high voltage, that is to the system rather than the grid. This is a new thing for Greece, as for almost 15 years since the starting of the PV market in Greece, the market was dominated by small and medium-sized, mostly ground-mounted systems, which were supported at that time by feed-in tariffs or feed-in premiums. Now, for the first time, we have a lot of large-scale projects that have matured, and we expect this segment to take over regarding the overall installed capacity, and I will explain how this is going to develop in the coming years. An interesting point is that for the first time, the self-consumption market is also increasing. It almost doubles every year during the last 3 years, and we expect it to continue in the coming years. Just recently, in April, the Greek government has abolished the existing net metering scheme for prosumers and established a net billing scheme instead. And probably next week, we will have a ministerial decision which will actually signal the beginning of this new support scheme, the net billing scheme, which obviously will bring some changes in the rate of development of the self-consumption market. We'll see what it means in practice. Here is our best guess for the outlook for 2030. We have two scenarios which are not really very, very different. As I said before, there are so many projects that have secured a grid connection point. And apart from them, there are some 45 to 50 extra gigawatts waiting in the queue for getting a connection offer, probably sometime in the near future. But as you can see, our lowest estimate is for 18 gigawatt by 2030, and the most probable one is nearly 20 gigawatt. As for this year, we expect at least 1.7 gigawatt to be installed. In the first half of the year, already we had almost 800 megawatt already being connected to the grid. So I believe that our estimate is on track, and I feel quite certain that we will achieve the figures that you see. Now, if you go on a segment level, and we see the segmentation either on an annual capacity or on a cumulative capacity, we see a similar trend that we've seen on a European level. We see that the utility segment is increasing, and it's going to increase at least until 2027. Then there will be a small drop in that segment, but still it will dominate the Greek market until the end of this decade. As I said before, the vast majority of PV projects in Greece were ground-mounted, medium-sized projects that we will actually call them C&I, let's call them industrial systems. We see that the share of this segment is decreasing. Actually, this year we expect it to drop by 50% compared to last year. On the other hand, we see that the residential market is getting some momentum. And although we expect that the residential market as well as the C&I rooftop market will be influenced by the shift from net metering to net billing, still we expect these two segments to increase as we move to the end of the decade. And the reason for that is first, the volatility of the electricity markets and, of course, the volatility of the markets, but also the European legislation, which from one point on makes PV compulsory on new buildings. And we see, and we expect that this will help these two segments. Now, that's the positive view of things. Of course, there are some problems ahead, and Greece faces the very same problems that almost every country faces nowadays, which is first a bottleneck in grid connection offers. The Greek TSO is planning to offer connection terms for almost 30 gigawatt of renewable energy by 2/3, and 2/3 of these connection terms will be dedicated to PV. So PV is doing relatively well compared to other renewables. As I said before, there are almost 70 gigawatts of PV applications that are competing, and obviously not everybody will get the desired connection terms. Not everybody will be able to proceed with their projects. But on the other hand, as I said before, we are a small country of 10 million people with very weak interconnections with other countries. So we don't really need all this capacity. The second problem that we face is that for the first time last year, we had curtailments for PV. Until now, we only had some small curtailments for wind, but not for PV. Last year was the first year that we realized that this will become a problem for PV. This year, and especially during April and May, people were a bit shocked seeing that the curtailments during these 2 months were even more than the whole 23. And we expect curtailments to be seen again in autumn. And if you take the annual level of curtailments, we expect them to quadruple compared to last year. But when you see it on an annual basis, this translates to something between 4 and 5% of the total expected PV production. The very same percentage is expected also for next year. And if you look at the situation for many weeks now, every single day, PV contributes over 50, 60, 70% of the energy during midday. So it makes sense that during these hours, and especially during weekends, we do have curtailments. And also we have wholesale prices very close to zero. Contrary to other countries, we hardly had any negative prices in Greece. But still getting prices next to zero is a bit problematic, especially for those projects that aim to participate in wholesale markets, which are not that many, to be honest, in Greece yet. We expect the problem of curtailments to ease a bit after 2 years. In early 26, we expect the first utility scale batteries to come online, to be connected and be operational. And we expect curtailments to ease. Now, it really makes a difference on how many batteries will be installed. According to the existing draft of the National Energy and Climate Plan, the government foresees only 3.1 gigawatt of batteries until 2030. However, there are rumors that it may be increased to 4.4 gigawatt in the next weeks when the government will present the amended National Energy and Climate Plan. Even this figure, though, is not enough to keep curtailments at reasonable levels. For example, if we only have 3.1 gigawatt of batteries until 2030, there are studies that show that curtailments may, in extreme cases, may reach 20% on an annual basis. Of course, if we install more batteries, well, we expect that the level of curtailments will decrease. It will be at reasonable levels. And the very same studies show that for every gigawatt of batteries installed, RES curtailments are reduced up to 1 terawatt hour. It really depends on the battery capacity, whether it's a 2 hours or 4 hours battery. So the message that many people send, among them our association, is do not stop battery deployment. Make things easier for batteries. There's a huge interest for batteries in Greece, both standalone and also behind the meter. The relevant applications for a grid connection is now over 45 gigawatt. It may have reached already 50 gigawatt of applications. So the investment interest is there. However, hardly any of these applications has got grid connection offered to be able to proceed with the installation of these batteries. The other thing that the government is planning to do is also to give access to, well, at least for the foreseeable future, to around 2 gigawatt of behind-the-meter batteries. And we expect the relevant legislation to be ready by September this year. That's all for me. If I want to conclude, regardless of the many problems that the Greek market, as any other PV market, faces, we are quite optimistic that we have a future for the years to come. And the good news is that most of the segments of the market will follow a rather healthy development, at least until the end of this decade. Thank you.
Thanks, Stelios. We do have a few minutes for a Q&A. So if anyone in the audience has some questions to any of our panelists, please type it in and then we'll distribute it among our speakers. Maybe let me just then start in the meantime. So Marius, so when you look at you've shown all these numbers also on expansions that we've been seeing, and of course the Chinese government is trying to somewhat get control of it, and also the big Chinese companies who have no interest in kind of announcing losses. I think the first announcement for the second quarter results didn't look so good. So let's see how that finally turns out. But when I was in China and also in Munich, so everyone said, okay, now we have this overcapacity for a year, and another year, then that's over, and then we're in a back to normal world. If we look at all the capacity announcements, and even if we look at many of the delays we're seeing now soon, because what you've shown are announcements, that's why it's obviously higher than how it will turn out to be, and especially now also with all these announcements that we're seeing, there will still be overcapacity. So if I think so even if all the smaller, let's see, the tier 2, tier 3 companies would vanish, which probably will not happen, you would still see overcapacity unless one of the big ones stops producing, which I don't know how likely that is. But so what's your view on that? Because prices are at a level which are great for the demand side, but obviously not healthy for the supply side. And we need, of course, also a healthy supply side, because there's a lot of CapEx also required to be put into R&D and to develop the technology further, also with all these challenges that we see on the flexibility front. So that means we have to do something with batteries and other flexibility tools. So what's your best guess on overcapacity when this sort of will normalize, or is this maybe the new normal, and the margins will stay almost as low as they are today for another 2-3 years?
Yeah, I mean, that's a good question. I will say that for the sort of the announced and active manufacturing numbers that we have, I mean, we go in and change them almost every single day, because you see someone is shutting down, or you see someone is moving capacity out, and the phase 2s and the phase 3s are now very unlikely to happen. But you're also seeing, I mean, some of the bigger solar majors just expanding more, right? And so I would say the total number is still growing, even though we are sort of removing a lot of these smaller projects and moving out in time some of the projects that have been delayed. It's really policy driven, I think. At some point, I mean, if they, let's say we could start with polysilicon. So when we were looking at these really elevated prices in 2022, it was due to a polysilicon shortage. It was not because we didn't have enough nameplate capacity of polysilicon, but you had a drought period, you had really high power prices in Sichuan, and then you had maintenance happening at the same time for a lot of these polysilicon factories. And of course, you had some fires here and there. But it kind of has to be this perfect storm. But if you're looking at the already consolidation in the let's say the silicon segment of PV, if one of the really big ones on the polysilicon side stops producing or shuts down a lot of their capacity, or say that we're not doing this anymore, then this is going to be translating to all of the other parts of the PV value chain as well. Now, if someone stops within cell or module manufacturing, it's not going to have a big difference, because you have so many players there now. And of course, a lot of the newer entrants, it's easier to get into module assembly than it is to get into polysilicon manufacturing or ingoting and wafering. And a lot of them are shutting down, but it's not making a dent in sort of the total picture, if you're looking at the total number. So I don't really see prices, let's say in Europe or any market that's trading freely with China, going up anytime soon. It has to be policy driven, such as you have seen in the US, for instance, where you have completely decoupled yourself from Chinese prices. You did see it a bit in India with the basic customs duty, but they're still trading with China, so the trend is the same. But as it sort of stands, without any one of the really big majors, and especially maybe on the polysilicon or the early value chain side, just decides to leave and walk out the door, I don't see lower prices globally anytime soon.
So that means the manufacturers on the product side have to basically get used to these 10-11 cents or where we are now, and rather have to improve the cost side of making some margin again. So that means using less silver for the cells, or at some point actually kind of squeezing out TOPCon, and then even leaving that behind as quickly as possible, so that they can increase efficiencies and improve margins that way.
Yeah, and I think also the focus on let's say the Chinese manufacturers is not delivering to projects in China, because they're not making any money off of those, but getting into markets where they might not be as price sensitive. So for instance, you're seeing heterojunction has a higher market share in Europe, because the European markets are not as price sensitive as the Chinese market. And of course, you're seeing some benefits to the generation curves as well for heterojunction versus TOPCon, which might make it worthwhile in the European market, but maybe not in China.
Okay, but that's mostly for the rooftop side of things, because on the project side of things, as you said, there's also a lot of pressure, right?
Yeah.
Okay. So I think that's probably then also one of the questions answered. So no module price increase expected to come in the near-term future. So I don't know who wants to take that with this overcapacity in terms of repowering solar sites. Does it still make sense? I don't know. Anyone wants to take that?
Yeah, I can provide a short answer to this. Yes, we have some anecdotes from the contacts we talked to that when they look at their financial models, at a certain point, it makes sense to repower these installations, even with the very low cost, somewhat outdated PERC modules that are circulating on the European market, for example. But then there's other things to take into account as well. And I believe it's something they put a lot of attention to as well, for example, is to choose your suppliers carefully in a consolidating industry, because you have to take into account things like the guarantees or the insurance or the claims made with the modules. So yes, it makes sense in some cases, and especially in the financial models, but there's more to take into account, which is also why it's not that easy to model an outlook on this. So no, we don't have any specific repowering data estimations on this, if that answers your question.
Okay. No further questions. Maybe I would have some questions on flexibility to both Salomé and Stelios. Stelios, you've shown actually that batteries are coming in slowly on the utility scale side of things. So how can this be speed up and accelerated to actually then also enable also faster growth or more attractive growth actually for solar again? Has the government that really on the radar now? So because as we are seeing now, it's getting slowly. I think as Simon also showed, this is our topic in Brussels now with our Let's Flex campaign. We came recently out with a study on Mission Solar 2040 where we modeled the impacts.
Actually, the government is now working on the actual figures, and they're going to announce their plan is that they will invite already operating PV power stations to install batteries behind the meter, and at the same time they will restrict them from feeding the full capacity of the power plant to the grid at any time. For example, they will only be allowed to feed, let's say, 50% of their nominal capacity if they have a battery. By doing so, they will actually create a new electrical space. The ministry estimates that in the coming 2 or 3 years, they could create a new space of almost 3 gigawatts, which could be offered to the queue waiting for a grid connection offer. That means that the market itself, it's feeding itself, and it's actually fueling its own development. This is the one thing that certainly needs to be done. On the other hand, very soon we'll have a change. We don't have a time of rate tariffs here in Greece. We have a flat rate for consumers. Now we only have night time lower tariffs. The government is planning to shift it to midday in order to facilitate PV deployment during the midday. So it will be a series of actions from enhancing grids to creating new electrical space to managing demand, and all this hopefully will let more systems to be installed. Also, even what was considered a rather harsh measure, I mean, the abolishing of the net metering scheme and having a net billing scheme instead, This means in practice that my guess also is that we'll see what happened in California, for example. We'll have more batteries installed in residential systems than before. So it's obvious that we are in the transition period. And of course, we need any possible tool and all the flexibility we can get in order to make sure that the PV machine will continue operating and developing through the coming years.
Okay, super, thanks. Maybe Salomé, how's it in France, whereas the system is inherently rather inflexible through the large scale of nuclear you have, but now solar is coming. So is the government looking into batteries, and how is the take and the attitude towards flexibility measures?
Yes, in France, in fact, it's not very much taken into consideration so far. But within the SER, we are working on defending the integration of storage and the home energy management system for residential segment. And so we are currently working on implementing some tools, for instance, in economic support. But this is not very much taken into account. So we are defending these new positions, and we hopefully will have some results in the next months.
Okay, wonderful. Thanks so much. I think we're already 7 minutes over time. Thanks to the speakers for the great presentations. Thanks to the SolarPower Europe team, and of course, thanks to the audience who joined us during basically what is the summer break in Europe. So again, I hope you're enjoying it, and we talk again in 3 months. Thanks to everyone, and have a great summer. Ciao.